A lot of people who may have gotten bullish on gold in the last couple of weeks, bearish. And that's probably exactly what the Chinese want, right? If the Chinese started this sell-off just by announcing a 1-month hiatus, from buying gold, and that was enough to get the new buyers to throw in the towel, well, now that's more gold for the Chinese to buy. And they got a lot of gold that they need to buy, and they want as little competition as possible. It shows you, what can happen. I don't know what it's going to take now, because so many people that maybe just bought into the market in the last week or two who are now gone, right, and just thrown up their hands in disgust, right? Who knows where they're going to come back in.
Today, we're breaking down Peter Schiff's latest insights. Last Friday, gold was trading just below $2,300 an ounce, while silver climbed back above $29.52. Schiff highlights China's strategic announcement of a 1-month hiatus from buying gold, which he believes was designed to drive prices down and scare off new buyers. This move reduces competition, allowing China to purchase more gold at lower prices. Schiff argues that this temporary dip in gold and silver prices is a golden opportunity for investors, as it signals a broader strategy by China to amass more precious metals. He warns that this could lead to a significant loss of confidence in fiat currencies like the dollar and euro, driving investors towards real assets such as gold, silver, and emerging markets. Schiff predicts that while short-term volatility may scare some investors away, the long-term outlook remains bullish for precious metals.
The U.S., with an election coming, there's just no way that Powell is going to hike rates before the election. It's just not even possible. Even if the inflation data worsens to the point that it's obvious that hikes are necessary. And so that's where I think the credibility is on the line between what the Fed says and what the Fed does. And when will the central bankers be forced to accept that inflation is not going to go down to 2%? That maybe 3% is okay. And of course, if they're willing to lower the bar to 3, well, what about 4? Once you change your target, it's no longer a line in the sand, right? So if the central banks say, well, we're going to go from 2 to 3 or 2 to 2.5, whatever, why should that have any credibility, right? Especially after saying for so long, 2% is the target, 2% is the target, trust us, it's 2%. The minute they change it to a higher number, that new number has no credibility. It has even less credibility than the old number because they were willing to change it. If they're willing to go from 2 to 2.5, they're willing to go from 3 to 4. If they're willing to go, from 2.5 to 3. If they're willing to go to 3, they're willing to go to 4. At what point would they be unwilling to compromise? Because what's the difference? And I think what happens is when the central bank is forced to abandon its target, that is a warning sign. And that is what's going to result in a loss of confidence in dollars or euros or other fiat currencies, a loss of confidence in sovereign debt, and it's going to cause a stampede into gold, into silver, into real assets, into emerging markets. So what happened on Friday was, again, a gift, an unexpected gift where people could take advantage of that and buy. Let me see where we're trading now. We're only up about $4 right now in the price of gold. We're still trading just below $2,300 an ounce at $22.98. Silver's up 29 cents, back above $29.52. It got as low as around $29.12 or 13, I think, if I can remember correctly, on Friday. So we didn't get below 29, but I think anything below 30 is a steal. We only really stayed below 30 one day last week, and then we got below it again on Friday. Interesting, gold was only down on the entire week. Gold was down, I think, 1.2%. 7%, which is not that much, right, for gold to be down on a week. And going into Friday, on Thursday of the same week, gold was up 1.9%. But if you look at the reaction in the gold mining stocks, when gold was up 1.9% in 4 days, the GDXJ, which is an index of junior mining stocks, was only up by 0.5%. That's how little gold stocks went up on almost a 2% rise in the price of gold. Now, the main reason for that was the big drop that gold stocks had on Tuesday when they were down by 4%. But gold was down only about $20 on that Tuesday. It was up about the same amount on the Monday, Wednesday, and the Thursday. So it was just one down day. But again, there is such a lack of conviction, even among the bulls, that one $20 down day scared the bejesus out of people, and they dumped their mining stocks. Well, on the week, the GDXJ was down 7% in 1 week on a 1.7% drop in gold on the week. And again, when gold was up 1.9% on the week, the day before, the GDXJ was only up 0.5%. So a fraction of the percentage gain. The stocks were up a lot less than the metal. But as soon as the metal went down, the stocks went down way more than the metal. And again, that's because whenever gold and silver go down, the gold stock traders assume it's going to keep going down. And they start discounting a future decline way beyond what's already happened into the price, and they run for the hills. So this is a huge wall of worry. I think, the weak hands, and there's pretty much almost all weak hands in this market. I mean, I don't know who the strong hands are. They're not the traders. But again, at the first sign of trouble, and they saw a lot of signs on Friday, and I think Friday turned a lot of people who may have gotten bullish on gold in the last couple of weeks bearish. And that's probably exactly what the Chinese want, right? If the Chinese started this sell-off just by announcing a 1 month hiatus, from buying gold, and that was enough to get the new buyers to throw in the towel, well, now that's more gold for the Chinese to buy. And they got a lot of gold that they need to buy, and they want as little competition as possible. It shows you, what can happen. I don't know what it's going to take now, because so many people that maybe just bought into the market in the last week or two who are now gone, right, and just thrown up their hands in disgust, right? Who knows where they're going to come back in? I mean, maybe gold will have to be well above 2,500. Silver might have to be 35 or 40 before some of the people who just bought, right? Some people finally just saw the move up in silver, and they bought in at maybe 31 or 32, and now they just sold out at 29. They took a loss, and they said, that's it. It's over. I'm getting out. And maybe some people actually got short. They're going to be in for a world of hurt in this next rally. I read a lot of articles. A lot of people think that there's going to be a lot more selling coming. Next week we get the FOMC meeting. The Fed is not going to cut rates, obviously. And they're going to talk. I mean, most of these press conferences have been very bearish. Very dovish. And so we could see a big reaction in the gold market, in the foreign exchange market next week that completely reverses what happened this week. But you still have a lot of people that just assume that the sell-off that started on Friday is just going to continue. It may continue for a day. I mean, maybe we go down again Monday or a little bit Tuesday. But again, this is going to be, I think, short and sweet. This is a huge bull market, and people are not going to have an opportunity to buy that big a dip. I mean, I think what we just saw is about all the opportunity you're going to get. But what these declines do is they're not enough to give the bulls a really great buying opportunity. They're just enough to scare the weak longs and to prevent other people who were considering getting into the market from taking a position because they get scared. And it probably emboldens the shorts, and it probably encourages people to enter the market from the short side. But you're not going to get a big enough dip for the longs, for the bulls, to get a really good sale. I think, these are short and sweet opportunities, and most people will miss them because the market pulls back, and then you're hoping that, okay, maybe we'll get a bigger pullback. I don't want to buy just yet. And the next thing you know, the market's running off to new highs. So I wouldn't expect there to be much downside below where we are now. And again, as I said on a prior podcast, I think 30 for silver is what 2000 was for gold. I think now that we've gone through 30 an ounce, 30 is really the support. Again, we could trade below it like we are now, 29.50, just like gold went below 2000 many times before it went to 2400 and hasn't got anywhere near 2000 since. I think silver is in that early stage. We just blew through 30, which was resistance for many years, which is now relative support. And I think any dip below 30 is an excellent buying opportunity. And I wouldn't press my luck looking for, 28 or 27. I think the time to buy those prices has passed. I was trying to get people to buy silver when it was under 25. But if you didn't buy it when it was under 25, you could still buy it now under 30. 30 is still a big pullback from 50. 50 is where silver got in 2011. And that's where it got in 1980, right? And it's still way below that.
Thanks for tuning in, everyone. Let's recap the key points from today's discussion. Peter Schiff highlighted China's strategic pause in gold purchases, which has driven prices down and created a unique buying opportunity, with gold trading just below $2,300 an ounce and silver back above $29.52. Schiff argues that this move is reducing competition and allowing China to acquire more precious metals at lower prices. He also emphasized that this strategy could lead to a significant loss of confidence in fiat currencies, like the dollar and euro, prompting a shift towards real assets such as gold, silver, and emerging markets. Despite the short-term volatility that might scare some investors, Schiff remains optimistic about the long-term outlook for precious metals. He pointed out that temporary dips often scare off weak investors, but these moments present excellent opportunities for those looking to buy. If you found this analysis insightful, make sure to subscribe to the channel and hit that like button. We appreciate your support and want to hear your thoughts. So don't forget to share your opinions in the comments section below.